Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte. We're just about 3 minutes away from the close of the market on this Friday, September 12th. And this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see here from this candle right there, that is a bearish harami pattern right there on lower volume. The stochastic is about to cross with a sell signal down there, and we have a full-fledged pivot point on the CCI. In addition to that, we have a wide divergence from this moving average right here, and we still have an open gap below the market down there. Now, if you're following along each and every week, you'll know that I follow the 7-point trading checklist. And what I just explained to you right there was showing us sell signals all the way down the checklist. There is not one single buy signal on that chart right there. And if you look at the intraday, you can see that we're still steadily heading lower into the close. We're down to about 2 minutes right now before the close. Now, if you take a step back and look at the weekly chart, you can see here that even though we had an up week with this green candle, we do have a long stretch of green candles down below. So we're long overdue for red. That's called a stale green light. And when you look at the stochastic down here, we're just about ready to cross with a sell signal. We have a negative divergence on the CCI. So I'm not putting any upside targets. It doesn't mean you can't take long positions, because we actually had 2 trades of the week that I'm going to highlight this week. It was a close call, and both of those trades were on the long side. So stay tuned for that, and I'll show you the signals and what we were doing to make money in the market following that 7-point trading checklist. So if I go to IWM, ticker symbol IWM, of course, this is the Russell 2000 ETF. You can see here, this is a weekly chart. We have very close to a doji. And look what's happened this week. That's the first red candle out of this long stretch of green. There we go. That's the closing bell. Once again, 4 p.m. Eastern time. So we're right at a resistance point up here on IWM. And if we get a drop in volume next week, it's most likely going to trigger sell signals down below here on the stochastic and the CCI. If we take a look at the Qs, this is the tech sector QQQ. You can see here that this week the market tried very hard to get back up over that fan line. Take a look as I step back and look at the monthly. That is a long stretch of fans, with this being the most vertical. And now that we have broken below that fan line, it's going to have a very hard time getting back up on that short-term trend. So I'm still expecting the markets to pull back September and October. But I am very bullish on gold and silver. I did take a profit in some of my AG position. I'll talk more about that as well, because that's one of the trades of the week. And again, if you're looking at the Qs on the monthly chart, you can see here that we are extremely overbought. And the oscillators, even though this is a whole long stretch of green right there, that's 6 months of upward movement, I think we're long overdue for a red month or possibly 2. And you can see down below that the stochastic and the CCI are already starting to pivot to the downside. Those are extremely reliable indicators. If you're not looking at them on your chart, I would strongly encourage you to at least look at them and put them on your chart. Even if you just glance at them once in a while, you don't have to keep them on all the time. You could just flip your charts, throw it on there. You see, what I have on my Thinkorswim platform is I have a bunch of different layouts. You see, I have earnings when I want to look at a stock that's coming out with earnings. Like Apple, I know when the earnings are going to come out. If I want to look at basic candles without any of the oscillators, I could just throw up a basic candle chart like you see right there. So it's very easy for me to flip through and check the different types of charts. If I even want to use a line chart, let's say I'm doing a lesson on how to find pivot points, I'll pull up my line chart. And then, of course, I have my weekly market report layout. That's the WMR label that I have on there. And that's what I use most often when I'm doing these reports especially. So again, the Qs I'm expecting to pull back this month and into October. So be careful with any new long positions or existing long positions. You can't lose money taking profits, but you certainly don't want to turn winners into losers, right? So you got to be sure to be on the defense with regard to protecting those profits. If we look at SPY on the daily chart, you're going to see we've got this very small candle, almost a doji right there. And today SPY was down just by a fraction, but that's a red candle on lower volume. And you could see as a result of the lower volume, let me zoom in there for you. You could see the CCI has completely pivoted lower. And again, if you take out that trading checklist, very easy to do. You know, we could give you a copy of that if you like. You go to our website, and I'll even put a link to the 7-point trading checklist in the description box below. But once you get the hang of it, you don't have to draw it out. You don't even have to look at the 7-point trading checklist. You'll just know, well, that's very close to a shooting star or a doji, which generally shows up at pivot. So that's going to be more of a sell signal. You can see that the drop in volume on the way up is going to be bearish because that's telling us the buyers are losing momentum. You see the wide divergence from the moving average. That's a rubber band effect. We talk about that all the time. When the market is that far above the moving average, it tends to snap back to the moving average. So that would be bearish. And the overbought condition on the stochastic and the pivot with an overbought condition on the CCI, again, is telling us that the market is overbought. So there are absolutely no buy signals. There's even a gap down here, very small gap below the market. So there you go, all sell signals on the right side of that checklist. And so that's what we do on Wednesdays. Every single Wednesday when I go through the rapid fire stock analysis session, we analyze 50 stocks, at the minimum 50 stocks in 60 minutes. Last week we did 55 stocks. And I do this very, very quickly because, again, once you memorize the trading checklist, then you don't have to look at it. In a split second, you'll be able to look at a stock and know whether or not you'd be a buyer or a seller there. So, again, I'm not putting any upside targets. My downside targets are going to be in place for September and October, just like any other analyst, except I'm a swing trader. You know, when you look at, say, Bank of America, or you got Goldman out there putting price targets on stocks, they just leave them for months and hardly ever adjust them. And then when they do, they're more or less pushing the market around by adjusting the price targets up or down. And so we're swing traders. We look at short-term signals, put short-term targets on the board. And so finally, look at the VIX. This is pretty amazing, actually, because we've got just pure complacency here. That's what that means. When the volatility is low, it means that investors are watching their stocks go up. They're not buying, they're not selling, and many investors have already spent all of their buying power, so they have no more to put in. And in fact, we got a report this week that margin levels are the highest they've ever been. What does that mean? It means that investors and traders are borrowing dollars from their broker to buy more stocks. And we talked about this yesterday on our equity analysis call with our members. It's like people, it's not exactly the same, but it's like you going out there and using your credit card to go buy stocks. Well, what happens if the market drops? Well, you're going to be in big trouble because now you're trading or investing on borrowed money. So when you have record high margin numbers and the market starts to drop, the brokers call in that margin, or they have margin calls that go out to their customers telling them you got to sell your position because we don't want to lose money because you're so leveraged. That's basically what happens. They say they're looking out for you, but they're really not. They're looking out for themselves, because if you take a huge hit, they could be in a position to lose money as well. And so what this volatility index is telling us is that the investors are just more or less sitting on their hands and they've run out of buying power. That's what that means. And that's usually what you see at a market top. So we have a major support level on the VIX right down here at $12.70. And so that, again, is bearish. Now, as we've been doing pretty often here, we've been showing you the trade of the week. The first one was in Majestic Silver. I've been talking about this one for weeks. I don't know how many of our viewers here on YouTube got into this one, but our option traders did extremely well, where on September 10th, a publication went out showing all the technicals pointing to the upside on First Majestic. And so many of our members went out and bought the January $10 calls for $1.10. And as of today, they were trading up to $1.90. So that's a 72.7% return on that. Now, taking a look at the charts on AG and when that went out, and you can see that on the 10th, which is right here, you see this bullish harami. Now remember what a bullish harami is. A bullish harami is a small-bodied green candle that falls within the body of a red candle. And when a bullish harami shows up after a bearish engulfing, that pretty much negates the bearish engulfing and attracts a heck of a lot more buyers. And so this one showed up, and then the very next day it basically launched. And then today even gapped up. Now, I will tell you that personally, I am completely out of this First Majestic Silver position. And I did so in the morning when this was a doji, because the gap up is telling me that if we gap down on Monday, right, if we gap down on Monday, you have a gap up, then a gap down that follows. That would be called an evening star. And so I did not want to be long with an evening star possibility staring me in the face. So congratulations to anyone that got into that option position. That was really a good one. Now, there was another one that came right in pretty much at the same time. It was on September 3rd. This is a week before the AG trade went out. This is Realty Income Corp. And I'll show you why we got into this, not just because of the technicals, but because of the fundamentals and what's happening with interest rates. However, on September 3rd, the publication went out to buy the January 60 calls for $1.30 down here. And you could see that as of today, they were up $1, trading $2.30. So this one was up 76.9%. And remember, members, if I'm talking about a trade that was at one point a publication, it's basically trade's done. You know, I can't tell people how to trade, but I could definitely tell you what the technicals are looking like. So again, on September 3rd, we were trading this one, ticker symbol O, and I'll show you what that one looked like right here. On September 3rd, you see that candle right there? That was very close to a hammer and very close to a bullish engulfing. But if you take out your trading checklist, you'll see that there was a drop in volume on the way down, and the oscillators were starting to hinge and pivot higher. So that was the day, right at that very bottom, that we bought the $60 calls, and it just took off. Now, the only reason I would say be careful if you're still in this one is because if you're looking at the technicals, and again, following the technical signals, you've got a drop in volume here on the way up. Even though it was up again today, almost another 0.5%, you got the oscillators starting to hinge and pivot lower here. And if you take a step back looking at the weekly, right, what do you got? You got a major resistance up here on the weekly candles. So I talk about it all the time. You know, you don't want to turn a winner into a loser. If you sell like I did and it keeps going higher, you can't be upset at yourself because you took a profit and now you have cash available to get into another position. Now, when you're looking at the fundamentals of a company like this, Realty Income Corp, you have to consider what's happening in the 30-year fixed rates. Now, right now, we're at the lowest level since October. So if there's any home buyers out there, and a lot of our realtor members will tell you this, if interest rates are dropping and there are buyers that are more or less sitting on the fence waiting for rates to go down, that is what's going to stimulate the buyer to start jumping into the real estate market. So a company like this one, like Realty Income Corp, could do very well. Now, the pattern here is even suggesting that if you get a breakout here, it could go all the way up to this level right around 65, right? But we're taking the profit and moving on to another trade. Now, talking about interest rates, if the Fed does in fact lower rates, the market has already baked that into the price action. That's what happened yesterday when the Dow rallied quite significantly. This is what the talk is. Now, the CPI numbers came out on a miss. So, inflation is still there. And you see what happened. This is from forexfactory.com. It seems as though the investor community is completely ignoring the signals. And it could be very painful down the road, because you look at what's happening with unemployment claims right here. This was a big miss from the forecast right here. 237 was the number that came out. And so this is a higher unemployment number. And if the Fed starts dropping rates, that could very well open up the door to inflation, to where they might have to say, you know what, we moved too soon. We might have to go back up to cut inflation. That's not going to happen right away. They're not just going to do an about face. But if that happens, where inflation really starts to rage forward, then the market is not going to accept that very well. And you could have all this optimism get sucked right out of the market. And then what happens? Now you got all those margin calls starting to domino and start to put more selling pressure into the market. So that's what we're looking at. And again, as swing traders, we are very, very excited. This is one of the best years I've had in many years. I know our members are absolutely happy. We get that from our webinars. We get a lot of the comments. And so if you would like to be part of our community, we have a 2-week trial. It costs you absolutely nothing. There's no obligation. You just sign up, and then it expires after 2 weeks. You don't have to call to cancel. You don't have to do any of that. And if you like what you see, then you stay. If not, then you go back to YouTube and you watch these videos. But I get a lot of fun teaching people how to trade. And if you're one of those folks that really enjoy looking at the analysis and digging into the markets, and again, I welcome you. We have a great bunch of people in our membership. So let's hear from you in the comments field. What are you looking at? What are you doing in silver? What are you doing with options? I'd love to know, get to know the audience a little bit better. And if you have any questions, you put those in there as well. And we will address every single comment, answer every single question that comes up into that comment field. And we look forward to that. So you have a great weekend, and I'll talk to you next week. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.